And a lot of people have PTSD from 2021 because the business cycle and liquidity peaked in March. Why? Because 2020 was that massive fall in the business cycle, massive stimulus. It was just a completely squashed cycle. Now, if I look at it, if I look at the business cycle, the ISM survey is still below 50. We've barely started going up. So it feels that the probability is this cycle plays into the end of the year or even into Q1 2026. And that's a tail risk. I think the market's going to struggle with this. If I'm right, people are going to get out of risk too early and they're going to be forced back in at the end, and you get that 2017 final explosion. That's kind of my working hypothesis now.
Crypto market is facing a huge turbulence right now, as it is going down billions of dollars in hours and then coming back in the next few hours. Raoul predicts that the current market cycle will extend into 2026, driven by delays in market movements and premature selling by investors. According to him, many will sell too early, only to experience FOMO and attempt to re-enter the market later, by which time it may be too late. Pal also likens this cycle to 2017 rather than 2020, citing significant factors such as the potential return of Donald Trump as US president and the continued strength of the US dollar. He believes these elements are shaping a unique market environment. Pal emphasizes that we are at the threshold of what he calls the banana zone, a critical phase in the bull market. He strongly advocates for dollar cost averaging, DCA, and increasing investments during this period, as he believes it presents a prime opportunity to capitalize on the bullish momentum. His insights align with his broader view that strategic buying now could yield significant returns as the market progresses. To delve deeper into these predictions and gain additional perspectives, let's watch clips of the interview featuring Raoul and Joe McCann, the founder, CEO, and CIO of Asymmetric. But before that, make sure to like the video and subscribe to the channel if you haven't yet.
Yeah, I think global liquidity leads and global financial conditions lead that. For me, it looks like we will see the turn. We really need the dollar weaker, which it looks like it's starting to do. And that should pick us up. We know that the Treasury is going to start draining the general account. Reverse repo, last bit of draining of that. They'll probably have to stop QT. Then there's probably a few more rate cuts to come in. I think market has underpriced rate cuts now, having overpriced them earlier.
The fact that, our view really is that we think there's still 4 cuts. We think the Fed funds futures market is wildly mispriced at this point, right? And furthermore, I think reverse repo dropped below $100 billion this week for the first time in a long time. The Fed is going to have to end QT, right? Now, one other thing that we're looking into that we think is potentially a huge tailwind is that the Fed could potentially drop the reg caps on treasuries, effectively enabling banks to go to 0% on those and buy an infinite number of treasuries, right? So of course they will. And this is, I think this is, I know you know this, but we want to share with your watchers and listeners that these are tools of the Fed that a lot of people don't tend to focus on. Yes, they know about QT and QE. Great, that's understood. But there are other aspects that they can lever to actually improve the broader liquidity, calm the Treasury market. I think Bessent's going to do a fantastic job as Treasury Secretary. He's a really sharp guy, understands global macro dramatically, especially FX. So to me, the concerns around is the 30-year going to 10%, this nonsense that I keep hearing, it's just not going to happen. They still have a lot of tools at their disposal to make sure that the markets are actually functioning and flowing properly.
Yeah, the other one that's coming in that is below people's radar screen, it's starting in Europe as we speak, which is Basel IV, which is yet another version of banks are going to hold more bonds. But it's all the same thing, right? Which is QE, not QE, which is we'll force the system to own these bonds, and then we don't have to buy them ourselves because QE is now a dirty word. So they'll do anything not to do QE unless they have to. One is driven by liquidity, which is the tech stocks, and all the others live off debt and earnings. And if you ask the average business across anywhere in the United States, they're not seeing a boom time yet because the ISM survey is below 50. So we've got 2 different forms of economic growth, and half of the growth that we got right now is the kind of pre-election goosing of tax and other stuff that's happening. So it'll work its way out. The economy will slow down. The Fed will get more aggressive is my general view. So given this we broadly agree, and again, we don't have a crystal ball, but we broadly agree. So let's talk about asset allocation at top level. From my perspective, as the ISM survey picks up, it's, in fact, when it crosses 50, is pretty much the perfect signal for alt season. So you might have been playing Bitcoin call options last year, but how are you thinking of this year in terms, I mean, you were a big Solana holder and other stuff as well, but what do you think your asset allocation strategy is going to look like? How you, right now? I mean, obviously it can change, but.
I'm going to respectfully disagree short term with you on alt season.
Yeah,
and
that
here's,
could be true, yeah.
And part of the reason is that, like, I've had a view for quite some time that I don't think Bitcoin dominance has actually topped. I think it actually still has some room to run. This doesn't mean that certain alts won't actually rise. It just means that it's not a true alt season until you see a complete, kind of reversal in Bitcoin dominance. That being said, the alts that we are actually looking at, I mean, the size of our fund, we can't be in the trenches with the degens, so to speak, right? But I do believe that if you look at, obviously things like Solana, right? Like, let's just call it what it is. Trump launched his meme coin 3 days before his election, or inauguration, I should say.
We'll come back to that later.
Yeah, we will definitely come back. But if you look just fundamentally what happened on Solana, hundreds of thousands of new people onboarded, records amounts of trading volume on DEXs, record amounts of tips on Jito, which is a service that you can utilize to land your transaction faster. I mean, it's very difficult for me to still see a scenario where either A, Solana should remain 1/3 the value of Ethereum, or B, any of the high performance, high throughput chains can currently catch Solana. Now, I'm a trader, right? I understand the technical underpinnings of things like SWI, which is fantastic. I know Evan and the CTO there that invented the Move programming language. As you recall, I'm a technologist myself. This is a very powerful potential L1, but as a trader, I want to trade it. So yes, absolutely owning something like SWI in addition to Solana, I think provides you some beta to your Solana core positions. And as the Solana ETF comes to markets, we saw yesterday a leaked version on the CME of Solana and XRP futures are going to start trading. The vol will start to slow down a bit in Solana, but the demand for it is nowhere near done. I think this thing has a lot more room to run. Now, secondarily, on the asset allocation piece, it is no surprise that we were the first fund to actually start trading and investing in meme coins in 2023. And this is one of the things that was a huge performance driver for us. If you actually look at the top 10 tokens for 2024, what was the #1 performing asset? Dogecoin. It outperformed Bitcoin, Ethereum, Solana, everybody.
I was long Doge. It's the Elon plus election plus meme.
It's a no-brainer, right? And then when he named the agency Doge, I was just like, you've got to be kidding me. This is so obvious, right? And in fact, Doge.gov website has a picture of the dog on it.
He's telling you this, right? It's a simulation and he's telling you what he's going to do, which is he's going to use it on X and use it on Starlink and everything else.
Exactly. And so from my perspective, I think we own some core positions in what I would consider a blue chip meme coin. So these are things like your Doges and Bonks and kind of Pepes of the world, right? And part of that is a function of the liquidity available in the markets. We can't be, buying $100,000 of something is just not moving the needle for us, right? So I do think that, trading these things tactically, but having a core view that meme coins needs to be a part of your asset allocation is going to be key for the rest of the year.
I can't imagine a world in which a Doge ETF is not phenomenally successful. I've been begging Jan van Eck for a year now to say, file for this bloody thing before somebody else does, because it's going to get $30 billion of capital.
100% agree with you. And by the way, Bitwise, which I'm an investor in, they just filed for their Doge ETF, right? So this is coming, right? And last year when I was chatting with Jeff over at Bloomberg, who's one of the guys that works for Balkunis on the ETF stuff, when the Ethereum ETF, spot ETF got approved, which caught everybody by surprise, my immediate view was Solana's next, and there's going to be an utter proliferation of these ETFs going forward. And the reason is, as you know, asset issuers love to make money on the fees of these things. And if they look on chain and they see trading volumes of meme coins or pick another token.
So these two experts believe if not this quarter, then certainly this year is going to be very big for crypto. And they also believe that now things have changed, and meme coins are going to have actual value very soon. And a lot of coming ETFs are going to be meme coins such as Doge or maybe WIF, along with other high potential layer 1 coins such as Solana. And that's all for today. Make sure to subscribe to the channel so don't miss any future update.